Hello and welcome back to our channel. My name is Avi Aronov and I'm here actually coming to speak to you about how I'm planning to take a $10,000 account to over $100,000 with honestly in about 2 months, but I believe I can make it happen faster. Once you understand a couple of things that we will talk about in this video, you actually will understand that the scalability of this business and those type of principles can help you scale very fast a fairly small account, but it's about the principle that we will talk about. So first principle that I want to talk about, which is most important, is basically your patience. Okay, patience are key in the element of trading, and really in any aspects of life. You have to be patient if you are in a relationship. You have to be patient if you are actually building a business, which trading is a business as well. Okay, you have to be patient in anything in life that you looking to work towards that is worthwhile for you. So patience is crucial, and many times that I myself even don't act as patient, and I see certain things on the chart and I just take a trade because I'm thinking that now I know where it will go towards my plan. I've been proven wrong and lost quite a bit of my account. Okay, so that's why I start with understanding that patience, it's very important. And at the end of the day, I will be making another video about why most people think trading is easy, and then when they enter to it, they find out that it's not so easy and they lose a lot of money and they are mad at the markets, not at themselves. So we will talk about that. But what's important to understand that in patience, you actually have to wait for your analysis to work, for your areas to get to really, you actually then will need to have patience to make sure that the trade, the market will bring the value towards the areas that you're looking to take a trade from, and not really force trades or chase trades that are not going to be worthwhile for you and your P&L at the end of the week, at the end of the day, at the end of the month, and maybe even at the end of the year. Okay, so it's very, very crucial. Then the second thing, remove. Second thing that you want to understand, it's the type of edge that you will be using, okay? Because it's not easy to understand what edge you want to actually trade with. If it's some people want to trade only based on one confirmation, two confirmation, three confirmation, or so on. Okay, I like to trade to have minimum three confirmations. That's why I use quite a bit to make sure that I'm looking to scale the account from 10,000 to 100,000, which we will come to the edge just in a minute about what exactly I'm looking to do to actually bring that account down. So first, we understand that it's patience. Second, it's the edge. So let's make sure that we understand what edge we are using, and each person is comfortable with their own edge. So it's important that you discover the edge that works for you. However, good to know that you can learn either from myself or other YouTubers or teachers, mentors that will show you their edge, and maybe you will resonate with that a bit more. Maybe you will feel that their confirmation, their systems of trading will be a style that you feel comfortable around putting a trade, because at the end of the day, all it is, you are either clicking on the mouse or you sliding on your phone to enter into a trade and exit from a trade. So it's not that you need to do anything complicated more than that once you actually figure out why you're trading. Okay. Third thing, we want to make sure that even though we figure out our edge, we want to make sure that we keep on learning. Okay, you always want to learn. As my first mentor, Bob Proctor, actually told me, he said, Avi, you want to make sure that you always keep on learning. Which actually, in one of my points here, I have a point that talks about journaling and review. And part of learning, you want to make sure that you learn from others, but also very important that you actually learn from yourself, your own mistakes, your own failures, your own flaws that doesn't work for you, maybe different type of scenario, if you have people around, or maybe if you're doing live trading, all of a sudden you feel certain pressure, or maybe if it's oversizing the trade or forcing a trade or whatever it is, you will be able to recognize your own flaws and learn from that. So you basically trading you versus you, so you will be able to become so much better if you learn from your own mistakes. That's number one. Okay. Now, what also important is to make sure that you're looking at different strategies that work, but don't overlook and then get confused and worried and never slide that finger or click the button on your mouse to enter into a trade, and then you sit and keep on watching the markets and then be frustrated that you knew the trade will work. I've been there. I have done that. That's why I'm telling you. Okay. You knew the trade will work, and yet it worked in your favor, but yet you didn't capitalize on that. You didn't enter. So then what happened? You enter into trades that wouldn't work, and then you would doubt yourself again. So that's why it's important to make sure that you keep on learning, okay, and learn from different people. But make sure, if you are watching one person, okay, and you are seeing their strategy, make sure that you first, even on paper trading, try the strategy for yourself. Because if it works for one person, it can work for you. You might miss one or two pieces of the puzzle to understand exactly what it is to glue all together and make it capitalizing for you as well. And once you figure out that one piece, you will be able to capitalize. Then, once you capitalize enough, don't just throw that away and try another strategy. Continue with your strategy, but with different market scenarios, you might be able to use other strategies that will be there as well. Okay, so a scenario, it's if you go from balance to imbalance, you might have that as one of your confirmations or trading strategies from balance to imbalance scenarios. So it will be one strategy to wait, but then what you do during all the others, you might trade other instruments, you might trade other strategies, you might trade with indicators if you feel comfortable, and other things that are related. So make sure that you keep on learning and know what edge you like to use. Now, another important thing that you see, you keep on learning, but more important is also to make sure that you have a plan. And the plan needs to be there every single day. As you are entering the day, you want to make sure that you have a plan as to where are you going to trade. If you will sit there all day in front of the screen and basically with no plan, just trade to trade, you will go crazy, you will have a lot of losses, and potentially you will get very frustrated, you will get tired of it, and you will chase things and you will get mad at yourself and exhaust. Okay, you will exhaust your emotions very fast, you will feel overwhelmed. Okay, but when you trade your plan, you're so much calmer. You don't trade your emotion based on emotion, you trade based on your actual analysis, you trade based on your actual plan, and it's so much easier for you because then, let's say an example, if you have a stop loss, you know exactly where you will step out, how much you already lost, you know that. Okay, so that's your insurance. Then you know exactly where you enter, so once it gets to your entry level, you enter. You know exactly what confirmation you will be looking at, so then it's not like, oh my god, where am I looking? I have to look at number one, my footprint. Then I need to look at my RSI to make sure that it's in the area that I need. Then I'm looking at the formation of my higher highs, lower highs, or whatever the case might be. I'm looking at the different formation of the candles and the zones and everything that I planned in advance. How do you plan? That's something that I actually had for quite a while a question about. And you know what? No long ago, I understood that, and it's actually helped me to be more profitable since I recognize that. So, in this video, we will cover that as well. Okay. And one of the last points that I have before I start to go over my putting all of those pieces together and how are we going to grow the account from 10,000 to 100,000, okay, is basically journaling and reviewing. So it's very crucial to make sure that you journal and review. Now, what you want to do, okay, one thing that I would recommend you, it's at the beginning of the day, either you can journal by hand or get yourself some type of journal tool I use for myself, TradeZello, okay? And it's not that expensive. It's about $320 a year, or $400 a year. You can also get a coupon to, save some money on that. If you need, just let me know. I will get that for you. And basically what happens, then you want to put in there your plan, okay? You want to put in there your plan, your journaling during the day, what you're doing, how you're doing, what you're feeling, how you're thinking. Did you enter? Did you exit? Why you exit? Why you enter? You journal most of those things. You put your pictures in there, screenshots, and so on. And then you're able to review, because success leaves clues. Same with the chart. Chart will leave you clues. Is it because of, is it because of trend lines? Is it because of what that things didn't work out for you? Okay, so now what I want to do, I will share with you my screen, and I will show you what is the edge that I'm using at the moment to scale my account from $10,000 to $100,000. Okay, so number one, okay, what we're looking at is basically, first thing first is, at the beginning of the day, we want to find every day highest quality setups with zones, or which will be of supply and demand. Okay, so those zones will be at the pivot high. You can see there is consolidation here, and at the pivot low before a rally. Okay, so we have this one and we have that one. This one was used before, as you can see, and we capitalize on that very well. Okay, then when it broke below, so we changed the color to red, because on a retest we want to see that it goes lower. However, that didn't work. Okay, so on this one we didn't capitalize as much. Okay, so number one, supply and demand. That's the first confirmation that we want to use. And going back to the first point of this video, it's patience. We have to have patience waiting that it will come to the zone. Now at certain level, what you will see that we can play towards the zone. So as it's coming towards the zone, we can play. Okay, another video I will be making, it's about a trade that I took today, actually, and the lessons, the profit, the losses that I was able to get on that, and everything that relates to that video. Watch that. You will be amazed the type of lesson I will be sharing with you there, which I don't want to mix up the videos, so I will not share anything on this video. I will wait for that next video that will be basically from the same date, July 15, 2024. I will make that video a bit later today and share on the channel. Okay, so we need to have patience waiting that it will come towards the area, and then we can enter with certain lots to go towards the zone. Okay, then what is our next lesson is that we want to keep on learning. However, let's make sure that we cover the edge first. And what we want to keep on learning, it's basically from different people that possibly we can learn. Now, I have a great mentor that teaches me a lot of those stuff. At the same time, I'm learning from different mentors as well from YouTube. Okay, so we are using the RSI. Okay, so how we are using the RSI with the candle formation. So let's start with that, and then I will show you another confirmation that we're using. Okay, so when we will see the RSI that is above, okay, the 50 to 100 here, okay, which very rare it will get to 100. When we see that it's from the 50 to 100, When we see that it's from the 50, gets rejected and goes higher, especially also from that VWAP, which is the red, okay, it's rejecting and going higher, okay, then you see on a retest of the VWAP, it's got rejected and moved even higher again. So now it's here in this area, okay, right here, it's showing us that there is more green. So it's getting rejected. Now, as we see that it's cutting through that VWAP, okay, so you can see this is in this area, okay, you can look right here, okay, in this area, it's cutting through and it's not breaking above. It's almost testing it and not breaking above. What you also can see is touching the 70% right here, okay, and not going above. It just acting as a resistance. So basically, we can see this consolidation, and this is a confirmation, okay. And then you see it's made that pivot high, touched the VWAP, couldn't break above. Now the VWAP already came below the 70, okay, and then it had that massive drop. Okay, as you start to see this drop, you can see the drop actually on here already. It's rejecting from the VWAP and going away. Then you have a very strong confirmation to enter for the short. Okay, it's basically by the highs, got rejected. You can enter from that short and make a ton of money. This one day was like $400 move. Okay, in this 30 minutes or 1 hour, we had almost $300, another $100 here. It's basically already $400 that you could see. That was literally just before the weekend on Thursday. Okay, so this is very, very crucial idea to understand about the use that as a confirmation to enter for your short or long. Okay, so this case was short, and then look, it came to oversold. So you can see here it was green, here it's red, it's oversold, and look how again the same thing formation, and look at this rally. Okay, basically rally of 200 points again from here, 370 to 740 or so. Okay, so that's what you see right there. Now, to get this indicator, okay, what you do, you just go to indicators, okay, and you basically get relative strength index. Okay, so it's showing you the relative strength of this index. Very simple. RSI out for you like this. Okay, because when I was looking for it, it took me like I couldn't find the RSI. So I thought to make sure that I mentioned to you that it's a relative strength index. And then what I did here, I basically double clicked on that. You have all of those things that are checked. Only thing that I did is basically I changed the color, which you can put anything, any color. Okay, I put it black for the VWAP, and I put it red for the I put black for the line of price, and I put it red for the VWAP. Okay, perfect. So now that we understood that, let's look what is our third confirmation. Okay, let me just actually I just turned on my. Basically, we can understand the two confirmations that we're using up until now with our patients. Okay, with the patient, we have the edge, which is our zones. Okay, which will be supply and demand. We can also have other things like whole number, and again, those things will come at that point to the edge that you are using. But I'm using here with support and resistance. Okay, supply demand, whole number, psychological number, RSI. Okay, and then the next very, very powerful confirmation that I'm using, okay, it's that which is basically our footprint, okay, which will show us a lot of things on the candle and its information. With that, it will show us here delta. Okay, so it will show us the delta as to is there more power for the up or more power for the down. Okay, the difference between the contract. So let's an example. There is 100 lots that are being bought for calls, okay, for higher, and then there is let's say 50 that are being sold, so the delta will be 50. So we will see in this number right here as delta 50. Okay, so it's showing us more strength here. Okay, this line right there will show us a heat map. Okay, so you see how those colors changing, okay, as they are changing. So when you have like this one, okay, it means that there is a lot of liquidation that are waiting to be filled. So most likely we will see the chart, the price basically going towards that price. Also, what we can see right here, actually, I will pause that just for a moment. Okay, so in reading candles, okay, like this, it's basically the same as what we were looking at the chart with trading view, but basically on a footprint chart. Okay, uh, which basically you can see right here. This is the top wick, the bottom wick, and this is the body that closed. Okay, but what we can see that there is more sell orders versus the buy orders. Now, what you will see that there is also sometimes red orders. You can see red orders, red orders, red orders. Okay, sometimes you will see also green. Now what that means, okay, what that green and red means, why we are looking at that and how we can understand that. Okay, so number one, it's important to understand that for each one of those it's a tick on its own. So that means, let's say 20,100 for that price, let's say it's this many lots that are being shared. To 20,100.25 is this much and this much and so on, each tick, okay, that is being bought, okay, or sold. Now what we have to understand that when we look at this, somebody has to pay a bit more or a bit less for that lot or contract that you are looking to sell. So how we are reading those candles, it's basically going in sideways. Okay, so not like this. You will be reading it up every time. Okay, so you can see here it's zero. Okay, because here there is no number. If somebody would buy here, there would be zero here. Almost not possible. Okay, same thing here, zero here. Nobody bought it on the bottom or under that. Okay, you can see two here, two here. Now this is for the up, and that side, okay, it's for the bottom, for selling. So basically, left it's to go down, and right is to go up. Okay. So what we can start to see that there is one here, there is 13 here. So what that means, there is very much higher volume on the ask, okay, to go up, okay, on the bid, okay. So they're bidding it to go up. Now this is aggressive orders. Here you can see those are aggressive market orders, okay, that are looking to go down. And you can see here there is a new zone that got formatted at that price because almost nobody wanted there. So there is a lot of liquidation that will stay, and the price will go towards that to go just test it, take some liquidity from there, and go into the other direction, probably. Okay, for most chances. So that's basically how we are reading it, how we are looking at it. You can see there is more higher at this price, more higher. It's continued to go up, touching that zone. Okay, and then what will happen from there, we will need to figure out. So you will see there is more higher right now versus going down, okay, at this level. Now, what happened, these delta bars, okay, so what you can see is basically anything that you will see on here, okay, on the delta, you will see here. Now, all on the volume part, okay, what you can see is basically the amount of shares that are being traded at this moment. Now, with that being said, you can see the price where it should go towards, number one. Number two, when you see that those numbers from 155 goes to 137, and then you see now it goes a lot higher, so you can see that it went towards that zone, grab more liquidities, and start to go lower. Okay, but here it was actually trapping buyers. Okay, for the long, it was showing as if it's going higher, took some of that liquidity and went lower. Why? Because you can see with the delta that it was dying down. Okay, and as it's dying down, it usually would go into the opposite direction. So look here, 291, then 210. Okay, from 210 went to 155 negative, 130, 137 negative. Okay, so that's something that you want to pay attention to. It's very important. Okay, and you can see how it touched that zone and it's rejected. Okay, it basically just went into that zone, but in the zone it was a lot more negative versus the positive. Okay, and when you look on the NQ, you can also look at the ES. Okay, and that can give you an additional confirmation because it moves relatively almost into the same direction. Okay, not always. Remove. Not always, but with high probability. Okay, also what you should pay attention to, it's this part right here. Okay, this part right here will show you at what price it wants to go down or higher. So in this area, you can see that it wants to go lower a lot more than higher, a lot more selling. Right here also, you can see a lot more for the up. So it might come down towards that price, but it will go up because there is no pressure for selling. Okay, so it's important to understand that. Remove. Okay, so basically, this is exactly how I'm planning to take my account from 0 to 100,000. It's number one, have my patience. Number two, have an edge at the moment, which I'm using, which I just shared with you, which is basically the technical analysis, support and resistance, supply and demand, key levels, okay, RSI, VWAP, and the price movement, relative strength of the index. Then I'm using footprint, delta, volume to understand heat map, and basically as a confirmation, also looking with the ES and NQ. This is my edge, and of course I'm making sure that I journal and review my trades, review what I did right, what I did wrong. So I hope it shares with you the idea of how you can take your account from wherever it is to the first $100,000, because once you get to 100,000, it's a lot easier to scale it higher from there. Okay, let me know what you think about that video. I will be happy to explain more in detail if you guys feel that there is some things that not as clear. We'll be very happy to bring that in more information to you. Okay, my name is Avi Aronov. Thanks for watching, and I will see you in the next one.